Oh, welcome to McBoss Capital channel. I'm Michael Chu, and we're gonna do a recap of the market for the week ending September 6th, 2024. And we'll have two parts of the video. First part will be a market recap, and then the second part will dive into some of the stocks that I'm still watching on my top list. Yeah, let's get to it. So we have a distribution day on Tuesday, which is the first day of trading this week, which didn't do that well, right? And then we have a distribution day on Friday again. And Friday we had the job report, which is weaker than expected. And as we see, September has started with more volatility, and so far has not been a good week, good month so far, and historically worst month of the year. So Tuesday we have a slowing factory activity. August purchasing managers in manufacturing index came in at 47.9 versus 48.0. This is the first decrease in 7 months. And then we have the August Institute of Supply Management Index, also 47.2, less than 47.5. And we have Russell and Nasdaq with the worst losses of 3%, over 3% on Tuesday, and volume rose. So that gives it 4 distribution day on Nasdaq, and on the Nasdaq we have seen 3 distribution days with declines of at least 1.1%. And due to this action, IBD now has lowered the recommended investment percentage to 40 to 60% from 60 to 80%. Also on Tuesday, we saw Nvidia really drop big, over 9% that day. And on Wednesday, we have weak manufacturing data. And again, okay, that was actually Tuesday. So, and then on Wednesday, we saw job openings shrinking, right? So the job report shows the lowest opening since January 2021, which is 7.7 million in July versus 8.1 expected. Factory orders climbed 5% in July, rebounding from a decline in June and beating forecast. Thursday, we don't have much news. Friday, yeah, the Nasdaq plummeted 2.6%, a weekly decline of 5.8%, ended the week below the low of the August 13 fall through day, and now it's just slightly 2.5% above 200-day. S&P tumbled 1.7% for the day, and is now below the 50-day moving average. It was a painful drop of 4.3% for the week, and the RSP index, which is the equal weight S&P, also fell 1%, but held above the 50-day line. So this index seems to be the strongest right now, and volume came in higher for both index, so that add new distribution days. The Dow Jones also skid closer to its 50-day line, fell 1%, and then for the week it dropped 2.9%. Small caps took a hard blow, falling 1.9%. Growth stocks did not escape as well, with IBD 50 plunging 1.7% Friday. Sharp declines across the index now have lowered recommended exposure to 20 to 40% range. So what to do in this market? Make sure to reduce in a measured fashion. Start by selling your weakest performance stocks first, and then take on any action that triggers sell signals, such as the breach of the 50-day moving average. And then next week we have CPI data on Wednesday, expecting about 2.9%. Economy since CPI about 3.2%. And PPI on Thursday about 3.3%. And then the following week we will have Fed meeting, and then this coming week we'll have earnings from Adobe and Oracle. This is from Investments Business Daily newspaper. Job growth sputtering. U.S. added 142,000 jobs in August, which is below wheels. I believe it was around 165 is what they expected. And then the July one was also revised to only 89,000. The 3-month hiring average now is the weakest since June 2020. So that's pretty weak, right? And then we have jobless rate edge down, which is now at 4.2%. And the wage growth also went up slightly to 3.8%. Let's take a look at the index of Nasdaq. So we have this 4-week downtrend and then a bounce, and then now we have another couple of weeks of downtrend now. So look at the daily chart. You can see we have this uptrend, with 4 follow-through days denoted by the blue mark icon here, and then you have the 5 distribution days, also in a very short time. And now this is where it is. So Tuesday was really the big day because why is that? Because we have this nice cup with handle pattern like this. This is a nice handle right here, and then you draw a line along the lows of that line, that level, and we saw that it undercut it on Tuesday right here. So on Tuesday, it broke that pattern, in my opinion, right? And so, and then since then, we Wednesday, Thursday, you can see, it tried to come back to the 10-day. This is the 10-day green line right here, moving average, and it just doesn't have the power. And as it closed on Thursday, you see near the bottom, and then Friday we continue the selling, right? So yeah, so this is looking very weak right now. And the 10-day slope is definitely coming down around this level, but it could accelerate, I'm not sure. Or it could just go sideways again and then come down more. So that's one possibility. Or it just, could collapse on Monday and do something like this where it bounce back and close near the top, and then could then kind of try to bounce back here, and then we'll see from there. But yeah, so those are the couple of scenarios that could happen. The other scenario obviously is, what some people hope for is it just bounce from here and kind of go through, right? So, that would be the other scenario. This would be the bullish scenario. But more likely not, I feel like the market is just really want to go down right now. And that's because we are close to 200 day. So most likely it may test this 200 day. I'm not sure, but if it does, then if it failed that level, the next level is right here, 15,700. So those are the couple of levels we would watch for in coming week or weeks. Let's see how that goes. All right, next we're gonna look at S&P 500 chart here, and very similar to Nasdaq, except it was doing really well last week, right? Right there was near the highs actually, and then that's where we were hoping that this week it would break out, but instead, on opening on Tuesday this week, we kind of pretty much gave up, and that's broke that pattern as well. This nice cup with handle pattern here was really nice, and then you can see Tuesday we fell apart. So this is a very dangerous pattern just because we've seen this happen in market tops. So we want to be careful because we don't know how long this downtrend could be. Even though it looks like it has been a one bad week, but it could easily extend to few more weeks. We don't know, right? So so we have to be really careful right now. Don't try to catch a knife, they call it, right? So as it falls. Yeah, so that's that. What else here? Yeah, very similar pattern. We dropped below the 5,500 level, which is also coincide with the red line 50-day moving average, which is a very important level, right? Generally, this level is very important. So we'll see what's going to happen here. Yeah. So that's S&P, and then we have Dow. So Dow on the weekly chart, you can see we already made a new high the previous week, and then this week we also fell apart, and it came back to the red line, which is the 50-day moving average right here on the daily chart. And again, this one was really strong as well, right? And you can see make new high, but then it gave up after. Now the good thing is it is still above the 50-day. So it looks like most of the index are going to, test their key moving average, right? So like this one will test this 50-day, and we go back to S&P. This one, I don't know where this one will test. It's still a big gap right here, and this is almost near the previous low. So from that sense, S&P is doing okay for now. And then we have Nasdaq, which, like I said, will probably test the 200-day right here, and maybe even the lows. If I go to RSP, which is the equal weight S&P, this one performed better than the weighted S&P, and because we make a new high just like Dow did, and then again it kind of gave up right here. But you can see this is the strongest one because we're still above the 50-day moving average. We haven't come, we're getting close to it. So we'll see what happens around that area, because that's important, right? Because when we talk about equal weight, that means we consider all 500 stocks equal weighted in the S&P, and therefore if we see a better market breadth, then maybe it will hold up here. So we'll watch for that bounce there. Okay. um and then QQEW is generally also weak. It's very similar to Nasdaq. You can see this one actually broke the 200-day already, right? Just because this one has been weaker index in general compared to the weighted one. So therefore the 200 is closer to the price. So this one, like I said, we broke it, and the only next level to test for is this down here, 113 on the equal weight. Let's jump to Russell. Yeah, Russell has a very similar chart to Nasdaq. Again, we have this nice handle right here, which is in the upper range of this base, right? Because you can see this is the level in the upper half. But then again, same thing. Tuesday we fall apart, ran below the 10-day moving average, and then now it's even below 21, 50-day, and now we are about halfway between 50-day and 200-day, right? So roughly right here. So the black line. So again, this may test this right here. Um, we'll see, and then if it fail that level, it will probably go down to here, and that'll be important. Let's see what happens. Again, this is mid cap 400 for S&P, and not much difference compared to the S&P. This one is below the 50-day. Yeah, I think it's very similar. Well, maybe slightly better because I think, yeah, it's similar actually. Yeah, it's below 50-day, and the 200 days down here. So again, it may test this level. Yeah, so one thing that I do want to say is, like, this week, because of this handle here that fell both on S&P and Nasdaq and pretty much all the index. Um, like that is pretty much where most of my stops are for individual stocks, because most of them are near the 10-day stop level. So a lot of them are out for my portfolio are gone just because of that stop. There's a few that is still holding up, which we'll talk in the next later half of this video. And they're still holding up doesn't mean they won't fall, um, especially if this market keep deteriorating, and it definitely could just bring the whole market, even the strongest stocks down, right? So obviously we saw that with Nvidia and stuff. So we'll touch on it soon. So that's the case there, and let's jump to IBD 50, which represent the top 50 growth stocks that they index, right? And you can see this pattern is very weak because the bounce right here, which looks fine, but then this handle right here is much lower than the halfway mark of this base, right? So this, like, between here and here, we are more at the lower level, right? The handle, and then obviously we fell, right? So the pattern is not as great. That's one problem to begin with. And then now we broke this level, right? And again, this is a very dangerous pattern when it breaks because this is the last chance it got to revive, its pricing. So it looks more likely, when we break like that, generally we do tend to test the lows here on the first leg down. All right, so that's IBD 50. All right, here's from investors.com's new paper again. We're looking at, this is the S&P 500 chart. You can see we are starting to come down below this key moving average here. And then we have the NYSE, New York Stock Exchange, advanced decline daily line, which measures how many stocks up versus stocks down. And you can see there's 1797 stocks down on Friday versus 507 stocks down up on Friday. So you can see there's about 3-to-1 ratio down more than up, and you can see it's starting to come down. Now this advanced decline line S&P has done pretty well because they keep making new highs here, new highs here, new highs here, right? So that's good. So again, S&P is definitely the stronger area in the marketplace. And then we have Nasdaq, right? So Nasdaq index right here, we are coming down right now. But you look at the advanced decline line over the year has been, keeps sliding down, right? Making new lows. And now we are very close to a new low again. So it just shows the breadth of this area. The Nasdaq stocks are not very strong. I know Palantir got added to S&P, so that stock might go up Monday morning. Well, I think over an hours is up. Last I saw was 6%, but we'll see how Monday morning it goes up. But Palantir is a very strong stock. It's in my top list. We'll talk about that. So that's that. And let's jump to this week. Market is still under pressure. We went from 60% to 40% allocation between 40 and 60. Then we also went down to 20 and 40 by Friday. So pretty much minimal allocation as much as possible right now. Reducing your portfolio is one way to mitigate risk as the market continues to fall. Now, of course, it could bounce anytime now. No one knows. But it's just, again, very hard to catch a falling knife. Trying to pick the bottom is a very hard thing to do. So we have 2 distribution day right now. Nasdaq has 5 and 3 on S&P. And they're very heavy distribution days. So yeah, a little bit caution there. And then the other thing that is very obvious this week is the number of stocks under accumulation has fallen significantly. And then it's now dominated. Look at how many distribution stocks there are, like over 300, 400, meaning they're down on higher volume, right? Yeah. And then we have industry groups, again, much lower now compared to the number of groups distributed, which is sort of 70 to 90 is quite a bit, right? When there's only about roughly 200 groups in the IBD to look at. Then we have the sectors in terms of accumulation and distribution. The net number is negative, right, for the whole week, pretty much for all these sectors. I don't think there's one sector that didn't get sell off, right, which is again pretty bad. Yeah, so there's really not much to it. I mean, there's not many stocks that are really holding up or even advancing. So it's definitely not a time to be aggressive. Again, trying to catch the bottom is a very dangerous game. Let's jump back to the charts. The first sector we can look at is part of the tech, the semiconductor group. And again, this pattern looks okay, right? Until this is the really tight area here. And this is a nice pattern. And what we want to see is this breakout right here. But instead we went the opposite, right? We went down, right? Like you can see. So Tuesday again was really a technical level where you can see it just really didn't want to hold on no more. And then after that it just continued to deteriorate. And chips stocks, semiconductor has one of the worst day that day, 7.5% on Tuesday. I think it's the worst day since like pandemic time, March 2020 sometime that time. So that just tells you, we are in a very dangerous time right now. Um, Again, no one really knows for sure why there's this big sell-off, right? You could argue whatever you want, but at the end of the day, the price action tells you everything. This is where people are, either selling, in this case, and you don't want to ask questions because, and the volume is pretty high on those 2 days. You can see right here on Tuesday and Friday, much more than the last 3, 4 weeks, right? You can see that, and this is the average right here. So you really don't want to question that. You just want to follow the trend. Now we did break through again. This is SMH. It break through the 200 days. So this is worse than the Nasdaq itself. We are, because we break through it, there's a high chance now that it didn't hold there. Because normally you would see a bounce back and maybe even close at the top. But because it didn't do that, now there's a high chance it will come down to this last low, which is around $200.49 for this image ETF, right? So we gotta be very cautious. And if we fail this level, I mean, this is like dated back, quite a while. Like there's no, if it fail this level, we have no more like, support until this last base here. That would be very extreme, let's put it that way. But coming to this level, I think there's a high possibility. So something to watch out for. So let's jump into like some of the semiconductors. Nvidia obviously, the number one growth stock in the marketplace. And it break actually not this is Tuesday this week. Obviously you can see it just went down pretty hard that day. Again, it down 9.5% that day, right? And when we have seen days where this top right here was down. What was it? Three. Okay, this one wasn't down as much, but it was a big reversal. Probably very close to 7% that day too. But anyhow, but the little message here I found is that this stock it came down, right? Not this week, but even last Thursday, last Thursday on earnings, and we have strong earnings, but and even guidance, but the market wasn't satisfied. They want more, and even despite the Jensen Huang promise, Blackwell revenue will start coming in, Q4, quarter four, and still the stock sold off, right? And so that was a hint that, something is wrong with the market. Now, that's only if you believe that a leading growth stock could lead the market. And so it broke that, tightness right here. And that was the first sign something is wrong with this marketplace. So where could the support level be? Obviously this low right here, which is very close to the 200-day. So again, if market continue to deteriorate, high possibility it will drop to this $90 level, right? So something to watch out for. Let's look at the other semiconductors, ARM. This was a very weak bounce because it's in the lower half of the space. And so, the chance of it not working it was much less. And you can see it fell apart right here. Let's go to TSM, Taiwan Semiconductor. This one looks slightly better. You can see the base was right here. I mean the handle. And it fell right here. So on Tuesday, right? The other one is Cyrus Logic. This one was doing really well. You see make new highs, but then again Tuesday, it kind of broke this trend right here, and now it's below the 50-day. Yeah. So the software area, actually doing not bad, right? Look at this bounce, and then it kind of formed this tight sideways pattern. And again, we want to see it break out on this pattern, but on the handle area, but instead it start to fall, and then look at where we are. We are at 200-day. Now this chart shows the 200-day is actually very close to the price already. And the reason is because this has a long consolidation period. Okay? So you can see, we tried to break out here, we fell, and we came all the way back down here and test the low, and then we went all the way back up here and tried to test the high, and again we fell. Now we're coming back to the middle range, right? So here we are the middle range right now of this base, roughly, and overall the pattern is still okay. We're still in the upper half. So if we can bounce from here, especially this 200-day right now, that would be very positive for software group. And there's a high possibility of that, right? Again, I'm not sure, like we could have undercut of this and then maybe come back here. We'll see. That will be the ideal situation and then slowly rebound from here. And maybe this time it will actually break out. So yeah, let's start looking at some of the mega cap software stocks like Microsoft. Again, this is a very weak pattern. You see this bounce right here is not even in the second half of the base, upper half, and so very dangerous to again, there's a saying, it's not about buying, at the low price, it's about buying at the right price, and the right price, the highest likelihood of the stock going up, right? And therefore, yeah, this one is not working right now. And again, same thing with this one. The 200 days already catch up with the price, and now it's below it. Obviously we have this low that could test here as well. Those are usually the next level. Amazon, very similar. The bounce, this one is better than Microsoft because it's more like in the middle range, right, of the base. So it still have potential, but let's see how it does. Like, if it deteriorates again. So, what if they do deteriorate more? What kind of pattern would it form? Well, it could form a double bottom, right? So this is like what they call a double bottom, a W-shaped pattern, and because it fell twice, a lot of people who fell twice, they might not want to get back in the stock, and then because that means that all the sellers are done. There's the short-term guys are out, and then only the long-term guys are left. And then when it comes back up here, why this might be a possible breakout is because there's no more sellers. Again, we will look at the volume. The volume is pretty low right now, so it's already, again, that's assuming a worst case scenario, like a worse case scenario, because yeah, to form a double volume would be quite a drop here. So all right, Google, this one is very weak. It's already making new low. So again, just like Nvidia kind of leading the downtrend right now, and you look at Google, it's also another one that's leading the downtrend because this one already broke the lows right here. So that could happen to other stocks as well, right? So this is like, again, getting a hint of where stocks could go, and this one broke the short-term 200-day, long-term 200-day moving average. So where's the next defensive area? Like, the support area right here would be this low of this base, which is quite far away. And then the upper range is right here, which is coincide with the 200-day. So we are in no man's land right now. So that's where Google's at. And then finally we have Meta. Meta has the best looking chart of all the stocks here, because you can see the handle is up here, right? Very tight right here. But on Tuesday it pushed it lower, and then on Friday it pushed it even lower. But when you look at this chart, it's still considered pretty tight pattern. And again, as I mentioned, the handle is in the second upper range, so has a high likelihood to, if it does rebound, it has a high likelihood to break out very quickly, right? Because we are not too forward, right? 500 to 544. So Meta is looking pretty good, overall chart pattern. Yeah, so pay attention to this one. Yeah, let's go to now Apple. Apple will have a conference on Monday, and we'll see what kind of AI phone they can come up with or what they promise. This is the reason why this stock has bounced pretty strong, almost near to the high right here. Um, and then it fall apart after that. Well, not fall back, it just fall right here. And then now we have this red line, which is a 50-day. Now, it has fallen below it 2 times now. Generally, the more times you fall below it, even if you bounce back, the higher chance of failure. So, because it just shows that there's no power to go up. But let's see, right? It's still early. 2 times, if it bounces like this and then goes up. Again, I think Monday's news probably will make the decision on the direction where the stock is heading. So let's watch for that. Tesla, everyone was jumping in on Thursday because of this breakout area above 220. Yeah, around 228. But now on Friday, so Thursday was up 4%, and a lot of people even guess on IBD that try out they could stop there, and or they sold at least on Friday because it dropped 8%. This is a very significant reversal, and you can see it even went below the 10-day short term. Just one day, it really took out the 10 days of moving average here. So that's amazing, right? Like, yeah, so I'm not sure. Like, overall, the pattern, I mean, this is the middle ground. The handle is a little bit lower, again, in the bottom half range, right? So that's why whenever, even in a good market, if the handle is at the lower bottom range, there's a high chances of things like that happen where it just get really choppy. And the reason why it's not in the second upper half is because there's just not enough buyers to push it up the price up faster. And so it's going to need more time to digest all these short-term sellers until they're all gone, and then once they're all gone, then the long-term investors comes in and they buy more, and then that pushes it to start higher. And then it will start the momentum, and then the short-term investors will pile in again and try for the breakout and stuff like that. So that's what's happening here, and let's see how that goes. So this is my top 100 list here based on price performance since July 24th. So it's roughly around 6 weeks of trading. And, so the columns here, like the highest date is mean it hit the highest price since that time. And some of this you can see September 6th, it was just ending Friday. It did. And then, so we want to pay attention to those ones as well as, so this is daily 3-month relative strength and weekly 3-month relative strength. So how do you do relative performance wise? They hit a new high on that day, and then on the weekly, they hit the new high for the weekly chart. So those are also important to pay attention to. So yeah, so let's dive into this. I'm not going to go through every single stock today. A lot of stocks are in pullback mode. So, feel free to look through them yourselves. But I'm going to focus on the ones that are still holding up or even continue to advance. Let's start with Elway. So Elway, Lifeway Foods, food dairy products, which is a defensive area, I believe, has gone up here based on earnings, and then since that time it has pulled back, and then now it has made the advance right here. This is the 10-day moving average slope, and you can see as it, right. And let me take out my markups for a second just so it's more clear. You can see it touches 10-day right here, and then it bounced, right? And then here you can see it didn't touch the 10-day. So even this week, right, with so much selling in the marketplace, this stock, even on Friday, look at it. Where do you close? It closed in the middle range. It just doesn't want to come down to the 10-day and letting the 10-day to catch up. And generally, the strongest stocks do that. And as this catch up, this is going to start to bounce again, and then it's going to pause, and then you're going to let it catch up, and that's usually what it does, right? So this is the first pullback here, and if I come back to my markups for a second, you can see I draw a black line because that's the first pullback after a significant advance, And this is what the pattern looks like. And it can pull back and then keep going up, right? That's what we want to see. So, focus on that pattern. That's where the momentum is. Yeah. So ASGN is the next one, medical products group. This is a very strong group this week, and I'm not sure if there's any news that propel this group. Many stocks in this group is moving up. Now this one closed Friday. It make a high on Friday morning, I believe, and then it overall it closed almost near the middle of the range, which is not a bad thing. And also there's not much selling volume, so that's another good thing. But generally, this stock has been doing really well. I mean, you know, if I take away my markup for a second, just trying to identify where the pullbacks are. So we have this earning gap up right here, right? Breakout zone, and then it pulls back, but it pulls to the side and let the 10-day catch up right here, and then you can see it didn't touch it. And then it moves higher right here. It moves higher. And then look what it does. It falls one day, and then it goes sideways again. And then look, then touch the green line. And then it bounces. And then it goes up higher. And then look at now. Now, I'm not sure if it touches it, but it is very close on Friday. So we'll see if it bounces again. Sometimes it touches it, it's fine. Let's see how it ends on that day. That's the more important thing. But right now, the stock is still holding pretty tight, and there's potential still. So let's see. I do have holdings right now, and you can see the red lines are, or even black line. Those are basically support areas as I move my stop, and so that's the last red line is where my stop is. So then we have INSP, also in the medical products group. As I mentioned, this group is really strong this week, so you can look at that on your time. Kava, retail restaurant, make a new high relative strength. Let's jump to it. So this stock has been on the rise, right? Since this, most likely I didn't buy into it right here. I could have, but I didn't, just because I was worried about the earnings. Now the earnings beat pretty good, and then, it fall through the next day, but it was quite extended. You can see the green lines down here. So it very extended. Again, never chase an extended stock from a 10-day. Generally they do pull back because it just can't go up, and even if it doesn't pull back, it goes sideways, right? And it will let the 10-day catch up, and as the 10-day catch up and you see how it reacts near the 10-day, and if it bounce again, that's probably your next opportunity to buy. Rather than buying up here, it's always dangerous. So that's something that I try to avoid if possible. Unless the breakout zone is still kind of close to the base trigger point, like right here, but this is up here, right? So there's more risk as well. So this one is a classic. It will pull back, and it did pull back to the 10 days. So let me take away my markup for a second. So it pulls back to the green line, right? That's the 10-day moving average. Now what I want you to see is how it trade around that 10-day. Look at it, 4 days of trading tightness around that 10-day. And then it bounced here on Thursday, and on Friday, it was a down day in the market, and yet what did it do? It closed in the second half of the day. Let's go to the daily chart because you will see better there. I'm just going to put it to 15 minutes so we can see more days here. Here you go. This 4 days right here was the bottom that pulled back. And look at, you can see it try to test the bottom, the lows, right? You can see those lows are being tested multiple times, and it just didn't want to go down below that green line. And that's a big sign that, a strong technical strength that, hey, this guy could go, and it did. And it go here on Thursday, and then on Friday, look, it tried to retest that low on Thursday, and again, it was holding and holding and holding for over an hour or two, and then it kind of bounced back here. Now, doesn't mean this stock won't just collapse one day if there was some bad news or the market goes into a really, deterioration mode. But for now, it looks good. So again, this is one of the few stocks that are holding up, holding the 10-day. Not many stocks are holding the 10-day. Most has fallen. So this is something to watch out for. You can see my bias around this area. Um, you know, and if it doesn't work, you can see this is where my stop is. I mean, a lot of people will probably put their stop there, and if it doesn't work, it doesn't work. At least, it's not too far away. So I'm willing to take that risk. But if it does work, then it might have a lot of room to go again. So we'll see. Then we have Wisco here, DOGS, ACLX, CSTL, AAS, MRX, CYH. So CYH is one that's making a new high as well, so let's take a look in that. So this is medical hospitals group. So again, I'm not sure if this is defensive area, but it's acting really well. So what does the chart look like? Well, we have this uptrend and this big pullback. And you see this pullback actually crossed the 10-day and tried to hold on to it. It just couldn't. And then it fell to 21-day. And then we have upside reversal. An upside reversal is a very bullish signal sometimes. More often than not, they do work, especially on a very huge range, right? Like, so this is a huge range right here. So it closed at the top. And so what happens after? It went sideways. It didn't go up much, but it also didn't go down much. It went sideways. So that's if you did buy on this day, you were still able to hold. And then it started to move up. And here where it moved up, and then it continues to go up. And then now, this week, you can see it start to pull back again to the green line, 10-day. It did touch it, right? Just a little bit, but it didn't close there. It closed in the second half of the upper range there. So again, another good sign. And then look at Thursday and Friday, continue to make new high. So this is very bullish action. Next, we have Duolingo. So that also make new high. Relative strength wise, AZPN also making new high. So there's a couple of tech stocks there. RXXT in again, another medical products group. AGX, this one report earnings, building heavy construction, and was able to jump quite a bit and break out. And here's the breakout zone, and they break out right here. Again, I mean, you could buy on the first day, if it, kind of come up from the base. But there's a risk, obviously. So that's up to you. But this volume was really high, so indicate lots of buying. Where it closed on such a big gap up, I mean, sometimes if it closes at the bottom, that's not a good sign. But if it closes like somewhere in the middle, let me see what the number range is, 36%. So I like to see it closer to 40 or 50% range. So this one is a little bit weaker. This is definitely in the lower 1/3 range, somewhere around there. So I would be more patient, just, letting the 10-day catch up, because it's still pretty low right here, right down here. So I would let it slowly catch up here. You can see the slope right now. And so, yeah. Next we have Way. Way also make a new high here. This is a software medical stock, and it's an IPO. And this chart is very strong. So here's the IPO base. It broke out, but it fell very quickly. And after this fell, probably a lot of people got scared, and the short-term sellers sold, and volume start to increase. And then here we saw the bounce right here. I don't know if there was any news. Yeah, this is the earnings news right here. The earnings came out, and boom, we have this one big day that came back all the way to the top, and we make new high. So that was the signal for strength. And you can see the 10-day is starting to move up really strong. And as it moves up, look at all these days. None of them, and here's the slight pullback. Look at this pullback. It didn't touch the 10-day. It didn't want to go down the 10-day as a catch up. So that showed a lot of strength. So it decided to go up even more after that, and go up more in the. And then here, it's starting to go sideways, right? It's starting to go sideways, and then it still didn't touch the 10-day. This stock is quite superior from that perspective. So finally, right here, right? So it went up more. Um, Let me just point that out right here, new high. And then it finally pulled back and it did touch the 10-day. It pretty much nicked it. Now that would be a little bit dangerous because it did close near the lows here, 2 days in a row. So that was a sign. But look at the volume. Like it's so low, like it's unbelievable. Like the selling volume is just not there. The selling volume, the red bar is down there. And then look at it. Thursday, Friday, it bounced back. Pretty much Friday, it bounced back. Thursday, it bounced back a little bit, and then Friday, again, it make new high. So the volume comes back in a little bit. Again, this stock is pretty strong right now. As you can see, it is in the top 48 right now. So yeah, pay attention to that stock. It is definitely extended from the original buy point. So yeah, there's a lot of risk if you're taking your position here. So CPRX, biotech stock, Palantir. So where are we with this stock? Well, we have this nice base setup. It broke out, but it fell. Okay, came back and tested the 200-day right here. So this is a good example to learn, you know, when stock fell, where does it go? Well, it dropped right here below 50-day, and then it fell all the way to 200-day, and then it bounces again. A reversal is a very strong, powerful mechanism or something to watch out for, especially when it's a big range, because the fact that it can recover so much it takes a lot to recover this much, um, so usually that's when you have an exhaustion of sellers. All the sellers just came out and gone. And then so when the buying comes back in, they move the price really fast because there's no sellers coming in. And so every bid just not enough sellers, so there's not enough. So then it just keep pushing the price higher, and so it did, and it bounced back so strong, almost like 20% here from this breakout, right? So and then if it started to fall back, and it lost the 10-day right there. So for short-term traders like me, I would be out. And let me just put my markups there. So yeah, so I sold that day, and then it fell lower, and then it tried to bounce back, and then you can see it make another low here. But so far this lows here is holding on, especially this week. Now let me go to intraday again. So here's the low that broke, and then here's the next low, and so far it's holding, especially on Friday. And then so where is the buy zone here? Well, again, assuming this is the handle, this is a high handle, obviously, and this is a pullback, and you draw a channel line down, and this is what we want to see. We want to see it break above that channel line, and it will. Why? Because they announced that it will join S&P 500 on the index, and look at the after hours on Friday, it jumped over 7%. So now we're at $32.71, which is near the highs again. But I would say the other important thing is, just the supply demand picture has been better. Look at the selling on the volume side. On the red bars, the volume has started to decrease significantly. Look at Thursday's volume. It's like one of the lowest, right? So this is another sign. Now the 50-day is catching up, right? And then the 200-day, they're all on uptrend. They're all moving up. And if we look at the weekly chart, this is the IBD's earnings bar, and you can see the earnings just continue to grow even into the future, and sales as well. So that is showing, this is what a growth stock looks like. Now this stock, a lot of traders say, hey, this is a very hard stock to trade because it's just so choppy, right? And it is true. It is very choppy. Um, you know, but you know, I know it is an AI stock. They do a lot of AI stuff, especially for the U.S. defense. And recently I think they even announced a big contract, so from the government as well. So we have this pullback on the weekly chart, as you can see. That is the handle we draw, and now it's going to break out. So that could be an opportunity to add again. You do have to assume what this current market environment looks like. This is one of the few stocks that is kind of holding up or breaking out at this moment. Now the next one is CLX. This is in the Clorox, right, in the cleaning supply area, soap and cleaning supply, and of course that is a more consumer staple type area, and we do have a nice breakout right here, right there. And look at this chart. It is going straight up. And it's just day after day and after day and after day. And even with this week's sell-off, look at the chart. It's just holding up nicely. Even Friday, it just doesn't want to give back too much. Again, the 10 day is like right here, the slope, and it's nowhere near it. We just broke out from a traditional buy point right here. Again, most people won't trade this stock just because it's usually a boring stock. But who knows? This stock could continue to go. Then we have HG, an insurance diversified box, computer software database, RMD, and other medical products, Exxon Security Safety, UHS, medical hospitals. Let's jump to that one. So UHS broke out on really strong earnings right here. You can see this long bar, and it followed through, right? And then it pulls back. And then you can see I have a position taking position around here, and it started to goes up, continue to accumulate, and then it came up here. It started to kind of go sideways. So let me take out the marker for a second. It went sideways, and it's getting closer to the 200 day, the 10 day, and the trading is a little bit more like the range getting wider each day progressed this week. And so I decided to sell half my position there. And then on Friday morning, it make a new high, but then it reversed, and look at this drop. Pretty significant, 4%. Let me look at look at this 15-minute bar here. So in the morning it went up, right? Break to new highs, but then it reversed. So this is a very toppy action. Generally, you want to get out, especially after make new high and then break a very strong support level. You want to get out. Because that's the thing. We don't know how far this will go down, and sometimes they could, spark more profit taking. Because people who buy here, they don't want to lose their profit if they buy it here. As it goes down, it just triggers more and more selling, right? So it happens fast. Sometimes it can happen fast, especially in more bad environments like right now. So just just a way of showing you how this was handled. Again, it right the 10-day pretty good, but right now it's just giving back. Another stock here, CGON, in the biotech area, making new high. I haven't traded this stock once yet. It's an IPO, you can see, in the bladder cancer area. And this is a nice cup with handle pattern, and it broke out on Friday. Thursday, I mean, you could have an early entry point if you like, but Friday is consider the breakout point. So let's see how it holds up here. And the 10 days is pretty close to it. So yeah. GEV, energy alternate other. This is the IPO as well, and then we form a base right here, and very choppy, not an easy stock to hold. So this right here was a big break, because it break all the lows right here. I think even this low, right? So it got a lot, it shake out a lot of weak investors here, and then it bounce, make new high. Guess what? Pulls back again, right? So very hard to stop to hold for sure. And then look at this upside reversal right there. Look at the range, quite significant. Close at the top, and then the next 2 days is holding pretty close to the high there. Very tight, trading very tight, and then it picks up. Okay, then we have another pullback on the 10-day. So this one do touch the 10-day quite often. So that's the one thing you have to pay attention to. And then look at Friday, it touches it again. Now, what's good about this chart right now is Wednesday, Thursday, Friday, they all close near the same area. Not only they close in the same area, they're closing at the top of the range of that day. So there's a lot of support. Doesn't want it to close at the lows. This is a very good sign. And when you have closing near the top of the range and the volume is higher, that means that there's definitely means more buyers coming in, right? Pushing the stock price back up by the end of the day. So let's just jump to the chart here on the intraday. So we have this low, and then it goes up, comes back down. This one comes down and then goes back up, and then this one comes down and goes back up. So this is, I like the V shape more than the reverse V shape, despite it closed higher. Just because we found the support, right? This is the support level, this is the support level, and obviously this one is the support level, right? And then this is the opening here is also a support level. So we have quite a few support levels, right here, right here. So yeah, you could play this even short term. You could play this like with support level there. If I show my mock-ups here, I draw a back line. That's the last support level right there. So that's GEV, and we have 5 again. Retail discount. AT&T. This is a newer stock. I don't think many people know this name. It's I believe it's a hotel chain, right? And China. This is in China, so some people might not want to trade a China stock, but here's the breakout right here from a trend line, channel line, and here's the earnings, and this is the 10-day slope. And look at it, after the fall through day on the breakout, look at what it did. It went sideways, and then it bounced. It didn't want to come down to the 10-day, right? These are signs of strong technical strength, momentum stock, and so we have this chart right here. So we'll see. The earnings line is really strong. Look at that, right? And then look at these numbers going forward. I mean, pretty strong. We have Airy, ACVA, insurance, retail, automobile, TCBX banks, Bumble, internet content, HHH, retail, ENLC, oil and gas, pod. This is another mega products that did well. PHG, diversified operations, FRHC, finance, investment bankers, brokers. All right. So again, feel free to go through the list yourself. But overall, like I said, many stocks are in pullback zone. Some of these ones are holding up. Not many stocks. Like I say, I like Kawa, I like GEV, I like Way. There's a few stocks that are showing lots of strength, but overall the market is beaten up quite bad. Most stocks are beaten up. But I want to say, don't give up hope here. Just pay attention to strong relative strength line. Stocks that are holding up better than the market. As soon as the market rebound, once this correction is over, we're going to see lot new leadership, most likely. Usually there is new leadership, so that's one area that will strive. We don't know who they are yet. Perhaps it's Palantir. I don't know. I'm just, we don't know, right? But at least the ones that are holding up right now, most of them, they're probably going to be the leaders. Again, that could be Kawa, that could be GEV. I'm not sure, but we just gotta pay attention to them. And this is the time that most people look away. And when the market bounce and move up really fast, a lot of people will miss them. they will miss the buy points. Those are usually the early points, lowest risk. Anyhow, thank you for watching this video. If you like it, please subscribe as well. Thank you, and comment if you have any questions.